Hey everyone, I am back. Never really left. It was more of just a hiatus because I am currently studying abroad in Spain. So it's nearly impossible for me to place live trades given my academic schedule and other commitments here. The time difference makes it very hard. But I'm doing the best I can to learn as much as I can and soak in as much information as I can. And part of that is by creating plans before the market opens and then seeing how they play out and then reviewing them. So now I'm going to review the plans that I created for this week. And I figured that I'd do a video on a couple of them. Yeah, let's just get to it. All right, so first things first, we had PLTR, and PLTR was a nice mover on September 16th, which I'll start off first with. I'll go over the plans I had on Thursday and Friday of last week. So September 16th, PLTR, the key level was 27.5. As you can see that we had a touch here. I'll just do an arrow real quick. We had a touch here and then also a touch here. So obviously it was very key, and we were kind of amping up. We had lower highs all over the place. We had some kind of strong volume coming in the day before this break, which was good. Always love to see that. And then immediately within the first 5 minutes, we see this 27.5 level break. And I typically don't play the first 5 minutes, so I most likely wouldn't have played this, but I'm definitely trying to work that into my arsenal. And I think that a good way of looking at that is through volume. And if I were to play this, I would have taken this probably at 9:31, maybe even 9:30 after the first minute or so, maybe even on this retest. This is a classic example of my rocket ship technique here, where we break the atmosphere kind of here, and then we come back down, test it, gain some confidence, gain some volume. Obviously, we dropped off a little, but the buyers were still present, and then pushed up. So you can easily see that the volume was lower the day before. If I can just come here real quick. So you can see that if I draw it real quick, that the volume here compared to the day before, and compared to that Thursday was a lot higher than this Wednesday, or Wednesday was a lot lower than this Wednesday. And I would have seen that, noticed that, and say, all right, PLTR's got some momentum behind that, and considering the market conditions, would have been a good play. Now, again, these are all analysis based on not the market. Feel free to go back on your own to look at the market. And that would have provided extra confirmation whether or not I would have taken this trade. But let's just say in a perfect world that the market was looking good. That's kind of what I'm looking for, my entries and exits. Probably would have entered right at 9:31, 9:32-ish, and then gone to with a whole number at 28. Probably would have exited right here as soon as I see some kind of trouble. I would have stuck to my plan at 28 and probably would have exited right around this area a couple minutes later for a nice little gain. This red candle is really nothing to worry about because I would be monitoring my trades on a 5-minute chart. So once I see that this 5-minute candle closed really strong above VWAP, it would have been a beautiful play. All right, on to the next one. AMD on September 16th as well. The key level I had was, I think it was 10, what was it? Oh, it was the trend line. And this was the trend line break that I was looking at. So if we go to a 1 hour time frame, we can easily see the clear downtrend. And it touched once, 2, 3, 4, 5, and then broke on the 6th time. And we put in a higher low the day before, coming days before that, and you can easily see that we increased in volume before the break, and I think there was some kind of news. So if I caught this at 1:45 market time, market time, yeah. I probably obviously would not have taken this trade because I don't really trade at this time ever. But if I did, I also just want to look at the analysis. So I would have taken it as soon as I saw us pushing here. Again, it's the rocket ship technique, which was beautiful. We came up here, rejected a little bit. We came back down, and then we broke it. So I would have probably taken it around 1350, so 150 or, whatever that is. Let's just go break it down on a 1-minute time frame just a little bit further. And you can see a beautiful RBNR, which is exactly where I would have taken the trade, and I would have gone to the next whole number, which was 106. Maybe even scaled one at 105.5. That's probably just a good idea if I was playing multiple contracts, and then would have taken profit right here, selling into strength, which would have been great. Would have been an amazing trade if I took that at 150 or 2 o'clock. I obviously wouldn't have, but just good to know that increasing volume, we had an RBNR, we were breaking a trend line. It was looking good. So BA, I wrote down a couple question marks here, but just something that I wanted to look at. BA was this 216 level, which I know that I think if quite a few people actually got trapped or stopped out or whatever it is. I just wanted to go over this real quick. So part of it is the first 5 minutes, and I think that this is why it's still very scary, in my opinion. It wasn't amazing volume in the first 5 minutes, so it is fair to say that it's very easy to get trapped in here, and there wasn't like a lot of volume. So it's a lot of volume, but not a lot to make me say, oh my goodness, this is crazy. So with that being said, we had 1, 2, 3, 4. On the 5th minute, we broke this 216 level, and this was a beautiful looking candle. If you just picture it all green, it's very easy to say, okay, I'm going to take this trade, and let's say I may or may not have taken the trade. It's very possible. Again, I don't remember what NQ or ES was doing at this point, so that would have also factored into my decision. But let's say it was a perfect market, I would have obviously taken it at the break here or right before. We were holding above VWAP, and we had increasing volume on this candle. However, I would have stopped out immediately as soon as I saw that we could not push it any higher on this strong volume candle. So I would have stopped out almost immediately, most likely, and gotten out due to this large wick. So probably would have lost quite a bit of premium just because it is within the first 5 minutes, which is why I'm very hesitant on playing the first 5 minutes. So I'm going to stay away from playing the first 5 minutes until I grow my account, until I become more confident, develop a fundamental system around the first 5 minutes. I definitely do not recommend playing the first 5 minutes if you are extremely inexperienced or anything like that. I still don't trade the first 5 minutes for this very reason, because they're very sneaky. So that was an interesting trade. But as soon as we closed below this level, I would have gotten out. And as you can see on a 5 minute candle, if I was trading on a 5 minute candle, I would not have taken this trade at all. Simply because we closed below this level, and I would have said, all right, sorry about that, not going in. However, if this candle went above this previous candle here at 935, I would have maybe considered an RBNR. It would have been a very weak RBNR, so I would have scaled down. I would have been very cautious if I were taking this trade. It's still at that point not very probable, so I probably would have stayed away from it, but always curious to see what would have happened. And then I wrote Square down as well as a possible play. Possible move. It was playing a lot of games here at this level. The level was 253.5, and if you look at a 5 minute chart again, just want to remind you that I don't remember what NQ and ES were doing. So I probably would have gotten in right at this 1045 candle, given we were in a perfect world here. It is possible to say that I would have gotten in here, or right around here, as soon as we see the rocket ship kind of come up. Right at 252, we see a decent amount of buying pressure here, which is nice, but I probably would have taken it anticipating the 253.5 break. And then I would have been extremely cautious. I probably would have stopped out again for a loss at this 1055 candle, just because we kind of closed below this level, and maybe it was just kind of a trade that probably wouldn't have followed through that well. This is kind of a tight stop on my end. I do understand that. But I do play with extremely tight stops just to maximize profit. And another thing that I could have noticed was that we were having almost, what was it, 1, 2, 3, 4, 5, 6, 7. So 7 green candles in a row, which is obviously somewhat of a big red flag in my opinion. If we look at the 15-minute chart real quick, we can see it a little bit clearer. So always looking at the bigger picture, we see this giant lower wick here. And if we look at, upper wick, excuse me. If we look at a 1 minute chart, we see that we do have some kind of consolidation here. I probably would have taken it on this candle, this 1046. If I was trading on a 1 minute, I really don't recommend it, but it has helped me a little bit actually. So probably would have taken it here with a stop below 253. Probably, we didn't have much follow through on this trade, so probably would have been break even, maybe even a little red. So those were all the trades on September 16th that were possible. Again, I probably would have just called it a day after PLTR if I capitalized it on it. But most likely, I probably would not have taken any trades. Maybe the square trade for a loser. So I do just have to figure out, what I, did wrong, or if I should just keep going. For example, if I did take this trade at 1048, we did have extremely, extremely high buying pressure, which, made me think, all right, or, would have made me think, all right, we're looking good here. We're pushing up. We just broke through a key level, and immediately we rejected 2 minutes later, and it probably would have stopped out for a break even, probably entry or even small red, which would have been fine. Yeah, so that's the trade for Thursday. Let's look at Friday real quick. Friday, September 17th, we had snow. And on snow, we had this nice 325 level. So if we look at it, from a 5-minute chart, would have been small red, break even trade possibly. So if I saw the first 5 minutes, I would have said, all right, there's no way. I'm looking at snow again. It looks terrible. But immediately, buyers stepped in right at this 321 level and bought this thing up like a rocket ship. It was crazy. A good note here is I would have waited for the retest. And the reason why I say this with confidence is because this is a massive, massive green candle. This is what retail traders love to see. They see a massive green candle and they think, okay, it just has to keep going up from now on because this thing is massive. There is no way this thing goes down. And look what happens. We went down. So that's why if we don't trade on my 1-minute chart either. The reason why I say that is because if I trade on a 1-minute chart, I look at this 940 candle, I see little volume, and I see it close above 325, and I say, all right, now we just got to wait for the RBNR here, and it would have been great. That's when I would have used the 1-minute chart, but it's also very scary because it was playing games at this 325 level. If I was looking at a 5-minute chart, I would have waited for the 5-minute RBNR. We were playing games around here, and I said, all right, if we came back up, it would have been a beautiful, beautiful trade, and hopefully with decent follow through. So again, I would not have taken this break just because, I would like to think I wouldn't take this break just because this is a monster candle that needs to breathe. And honestly, it would have been okay if this thing just kept running and running because that at that point is a huge gamble. And yeah, so that was an interesting setup. That had some valuable lessons there. And then the final trade that I want to go over is Snapchat, which was this wonky 73.5 level. We were playing a lot of games here, and again, 5-minute candles are huge and very successful with this strategy of key levels, simply because look at this. We closed at 73.46, which is 0.04 lower than our key level, which indicates I'm not getting in this trade. Now, if we took off and we, continued with this high volume, we peaked a little bit. It's possible I may have gotten in here a little bit premature. If I did, I would have probably lost over 50% on the contracts. But I would like to think that I wouldn't have gotten in this trade just because volume started dying off. And we had this nice big upper wick here, which should have told me, all right, be very careful. If we can push up, maybe even a little higher, I would have said, all right, great, let's do this thing. Unfortunately, part of trading is that sometimes these candles just happen extremely, extremely fast. If we go down to a 1 minute, we'll see this a little bit clearer. So I do like managing sometimes on the 1 minute just because it does save my butt a little. If I saw this close below the 73.5, I probably would have gotten out immediately. Again, this is within the first 5 minutes. So this is how the candle would have closed. So therefore, I would not have gotten in. If, again, we closed up here and then retested and then bounced back up. That's great, anticipating this trend line break. But we never really got that. I mean, a possible entry was here. Well, not even that because volume was kind of dead. But I just thought that was an interesting note that if I waited for this 5-minute close, I would have known not to get in this trade. All right, and then my overview of the market, I think what's going to happen is I think we're going to come back down to this 4,400 level. This 4,380 level is key. I think as soon as we get below this 4,380 level, I'm going to start heavily considering put positions just for a little bit. I do think that we are going to maybe base out tomorrow and then probably drop further. And I think eventually what it's going to look like is we're going to have this nice, big, healthy pullback, and then come up here and just take off. But obviously it's not that straight. You guys get the idea, though. All right, well, thank you so much for watching. I hope you learned a little bit from this. And I know I did, and I'm really excited to continue this journey. And even though I can't take live trades because of the time difference and commitment issues, I'm excited to sort of start this journaling process, and hopefully it will benefit my trading in the long run. All right, thank you guys so much.